Welcome to today's Sunday setup. Today is the 16th of December 2019. Markets are officially open as today is Monday. And before we get into this, if you're watching this video on YouTube, be sure to subscribe and hit that bell for notifications to keep up to date with our setups. And more importantly, guys, head over to litcapital.co.uk. Register for free if you're a beginner in the Forex industry. Register for free to get exclusive access to our Education Academy, which will give you a beginner's guide to Forex. But if you are already a trader who has been in the game for quite some time now and would like to take your skill set to the next level, then be sure to head over to our courses, jump onto our mentoring program, and get yourself the education you need to become a self-sufficient, profitable trader. Now, we're going to get into this by looking straight away at the DXY. As mentioned last week, we've been following this for quite some time now, and our predictions thus far has been correct. We have been anticipating a very bearish trend with the dollar. Of course, today we do have, the 15th was meant to be a conclusion of the China and the US deadline. So, we can potentially see some news come out today on that. Of course, Trump also has the impeachment issues around, of course, him, which can, of course, bring a lot of confidence or bring a lot of uncertainty to the dollar. So we are looking to see a strong pullback to kind of clear these equal highs that's been created on the way down. But with that being said, we are still remaining bearish and really just keeping our eye out on what's happening. I am in favor of actually seeing the dollar gain some strength this week. I'd like to see it really push up now as it has done from here. I'd like to really see it come up to this equal high, if not clear it, before making a higher low to then make a new higher high. So we'll keep you guys informed with that. Oil, I mentioned this last week and we've been looking at this for quite some time now. I'm playing off of an institutional candle I have across here on the left. Now, what I've marked out is 50% of the institutional candle you can see inside of my yellow zonal box over here, okay? So beneath that, we have imbalance. And as you can see, guys, we've had, nothing but higher lows and higher highs formed right the way up. So, we have to remain bullish in the sense of still being in favor to see price go higher. But we really want to know where price is going to slow down and turn around and mitigate out of. So I've identified this candle above, which takes us to $62. So what that does mean is, for the next, maybe up until Wednesday, we could continue to see some bullish action, clear the imbalance and then price really start to turn around. This will be a really nice setup to actually take the short. So because of that, last week on Friday, we was able for the community to send out a short trade right here, and we took 100 pips down. But as we can see, it's pretty much came right back up towards entry. So we've sat back, we've taken our profit, and now we really want to see the imbalance filled before we look at actually entering another short trade that we can actually hold for a considerable amount of time. As we can see, it would be a lovely trade, a nice ratio, 1,000 pip trade. We will be looking to hold this, but of course we want to make sure we are entering at the right time. Gold, also another interesting pair. Last week we was really, really fortunate to be able to catch the buy as well as the sell. We caught the move going up as well as the move coming down from this area here, which is a nice sniper entry. We had mitigation play. And at the moment, what we can see is still an uptrending market, higher highs, higher lows. Notice that we're not seeing any lower lows, okay? So for that reason, at the moment, what we are looking at, this candle here was the, if we go down to a smaller time frame, this candle here was 12 o'clock. Here we are, 1 o'clock, okay? This is the New York Open. So, a couple of things we could see from this candle. We could see the whole session being wiped out, meaning price could continue to come higher before it looks to turn around, or price could work 50% off of this candle, which we potentially are seeing right now. But more importantly, because we're not seeing any lower lows, we can expect a pull down into a discounted zone where we could look to buy before price actually continues to go higher, because the 4-hour structure is bullish. From once we've had a close from here above this area, the pullback is expected. And now, of course, we do really want to see price kick on and potentially go higher. And we've got a lot of interesting news out this week. We've got PMI, which can change perspectives and install confidence back into commodities. So we are, still remaining bullish on this. But as today is Monday now, we are just pretty much sitting on the sidelines, seeing what the day unfolds and attacking the markets when the opportunities arise. Pound NZD, very interestingly enough, this week, of course, we do have the pound interest rate. Okay, the pound interest rate, I do believe, is on Thursday. Double check that. Yep, so on Thursday we have pound interest rate. Also, we have the monetary policy summary. Now, what this basically will mean is, really with all of these here, but the England minutes, what this will be is a quite simply quantitative easing. So we're going to be able to find out if the government is going to pump more money into the economy. And if they do that, that will weaken currency. And of course, with the MPC, this is just basically people in charge of our, financial governing bodies just coming together and pretty much informing the people on where they're seeing the next, I wouldn't say 9 to 12 months, but where they're seeing the next, the near future in terms of strength for our economy and interest rate, or of course in terms of a decline. So it'll be very interesting to see what happens on Thursday. A lot of news for the pound, to see where the confidence lies, to see if they're going to increase our interest rate, of course, with the interest rate decision, and to see if they're going to install some more quantitative easing. Other than that, we've got a lot of interesting news for the euro. We've also got the yen interest rate on Thursday, AUD unemployment change as well. So we've got a lot of information to kind of monitor, but that's not until the latter end of the week. So at the moment, what we have a look at is areas that we could play off with the pound. And I'm playing off of, there's 2 institutional candles above I'd like to play off of. One has already been played off. This would be my entry. This would be 50% of the institutional candle, which I will highlight for you guys. And with that being said, what we need to understand is when it comes to mitigation or institutional candles, as we can see here, they can be played off multiple times. So we really would have had, played off here once, played off here twice. And now I am in favor to actually see price come higher because we have played off of this same area twice now. But of course, with taking into consideration the fact that at the moment the market's just opened, we really just have to see what happens. So my institutional candles within this yellow zone, like I said, I've marked out the open of the candle as well as 50%, and we've seen prices already played off of that twice now. So then the next institutional candle I'd be looking to play off is actually up here at 2.17268. And again, the open of 50%. 50% is marked in gold, and the open is marked in black. Now, at the moment, we haven't had anything rival come anywhere near close to this price. But for that reason, of course, is the reason why I'm saying if we don't see price react off of this area, if price actually breaks through, which I would like to potentially see, and retest this area, then the next area that I would look at possibly shorting the pound would be a lot higher, as I mentioned, 2.17268. So the pound has really got a lot of space in terms of height, and the pound has got a lot of upside potential. But with that being said, we still want to keep our ears open and really just monitor what's going on with the interest rate this week. And with the post-election now, we just really want to see where the confidence is going to lie. So we are still looking for a pull, but in order to catch a long right now, we still want price to come lower, okay? Because price is, in our terms, too expensive. So we would like price to come down. As you can see, price came down and checked into this market structure level. So here would have been a nice entry for a buy. With that being said, because today's Monday, really we don't want to analyze the pound until the end of today to really see what it's done, what areas of liquidity, what areas of interest the pound has really created. So at the moment, I would like to really see the pound come down. But if it doesn't, then of course my immediate response is going to be monitoring if price comes back up to play off with this institutional zone, or if price goes and closes above it, then of course looking for a retest to then potentially think about going long in the pound. That's my GN setup. Very similar with GU. I'll go to the daily just so I can show you a lot faster. Again, so I have an institutional zone over here. Okay, so this one I didn't quite mark out completely, but I have an institutional zone over here that I'm looking to play off. So all that simply means, institutional zone is up here. So all that simply means is, if we get price close above this area currently at the moment, and we actually come back to 1.34984, then we can really start to look at other destinations for the pound to reach. And I tell you this, guys, if we can see a closure above 1.34 as a whole number, then we can really start to consider the fact that pound could really kick on and push back higher. But, with the dollar really being weak right now, and the dollar having, their own impeachment and China trade talks, these are all reasons that can give us enough strength to at least remain somewhat bullish before we see ultimate bearish action. Remember, if we do have price close above this bearish structure, then that is still giving the market the authority to pull back. And within that pullback is when we'd really be looking to go long. So we do want to keep our eyes peeled. We want to monitor the markets as close as possible, but we need to let the market play out. We need to let price breathe. We need to see where the areas of liquidities are forming, and in order to do so, we have to sit back and just monitor. Mondays is usually the best day to monitor. We usually see fake news on a Monday as well. Just to reiterate, if you've been a student of us for some time now, we took this long entry in September. So really, we've been over 1,000 pips nice with this pair. And we are just really, really and truly just being patient now, seeing what the market unfolds. So guys, if you're watching this video, be sure to head over to litcapital.co.uk, get access to our trading locker room. It costs £99 a month. This will give you access to our trades. And if you're someone who really wants to learn and earn, then I would strongly advise jumping onto our mentoring program, getting yourself the educational content that you need to take your level of trading to the next step so that you can secure the bag. Why? Because every day is money day. I've been your host, Cavell. Be sure to follow us on Instagram, litcapital_. And always make sure, guys, you're patient, persistent with your charts, but more importantly, guys, just securing the bag. Peace out.